Bismillahirrahmanirrahim. This is the fifth video on financial accounting. And in this video, we are going to talk about ledger, posting, and trial balance. Please like, subscribe, and share my channel to search for accounting lessons and hit the notification bell button to alert you for the latest video. For all of your questions, comments, and suggestions, please put them in the comment section below. And for webinar and guest speaker invites, please send me a message at accountingamir@gmail.com. Accounting is AK. We hope that this video helps students in their academic development and teachers in enhancing their lesson plans and teaching methodologies. A ledger, commonly referred to as a general ledger, serves as a comprehensive record of a business financial transactions. It provides a summary of all revenue, expenses, debts owned, and assets owned by the business. The transactions recorded in a general ledger are typically categorized into five main types, that is, assets, liabilities, equity, revenue, and expenses. This organization helps to systematically document and track the financial activities of the business. The procedure of transferring journal entry amounts to ledger accounts is called posting. So I will like to go back to the concept of account that we have already discussed in the previous video. Account record is a record of increases and decreases in a specific asset, liability, equity, revenue, or expense item. The left hand side is called the debit, and the right hand side is called the credit. Remember that what we have talked about in the previous video, that each transaction while journalizing or putting in the accounting equation must affect two or more accounts to keep the basic accounting equation in balance. Recording done by debiting at least one account and crediting the other. There must be a debit and there must be a credit in each transaction, and the total of debit must be equal to credit. Now when we are going to record in the ledger, there may be an account, say for example we have a cash account, and if you can remember that all the increase in asset, that is cash, is going to be debit. That is what we have done in the journal entries. So all the cash debits will be recorded on the left hand side, and all the cash credits will be recorded on the credit side. We make the total of the debit, that is 18,000, and the total of credit is 3,000, and we subtract the credit from the debit, and the difference is 15. Now in this case the debit side is more than the credit side, so that's why we have recorded the balance on the debit side, that is the left hand side. What you can also notice is that we do not use the plus sign or a minus sign while we are recording while we are posting in the ledger, and we haven't done the same in the journalizing as well. Although when we are analyzing in the accounting equation, we use a plus sign or a minus sign as the case may be. Now this was an example where the debit is greater than the credit. It can be the other way also, that is the credits are greater than the debit. Like in this case, you can see, say, there is a notes payable, a liability, and increase in liability, if you can recall, generalizing, is going to be credit. And that suppose that we have a credit of 8 plus 3, that is 11,000, minus the debit 10,000. So the difference is equal to 1,000. So that is how we record the balance when we are classifying and recording the accounts in the ledger. So that is very interesting, and why the assets will always have a debit balance, for the simple reason that if a company has a total of, say, they have a total of 18,000 cash with them, the maximum they can pay is 18,000. They cannot pay more than 18. So obviously the debit side will either be more than the credit, that is when we are paying cash, or it will be equal to zero. So the minimum is that the debit side is going to have a zero balance, but there can never be a credit balance for cash. Now, when it comes to the notes payable, if suppose the company has taken a loan of 11,000, 3 plus 8, the maximum they have to pay back is 11,000 and nothing more than that. So that's why in the case of liabilities or stockholder equity, the credit will always be more than the debit. At the most, it is going to be equal to the debit, but credit will never be less than the debit in the case of liabilities or stockholders equity. So that is a simple way of recalling or just keeping in mind to ensure that you are recording the transactions correctly. Now, we have done in the journal entries that if the assets are going to increase, we are going to debit that, and when we debit it, it will be recorded on the left hand side, that is the debit side. If the assets are decreasing, they will be recorded on the credit side, and the balance of the assets, normal balance, is going to be debit. For liabilities, the rule is reverses, that is, all the increase in the liabilities are credit, all the decrease in liabilities are debit, and the normal balance for liabilities will be always credit. So for assets, the normal balance is debit. For liabilities, the normal balance is credit. Next, we come to the owner's equity, and that is when the owners make an investment or there is an increase in revenue. So, because of revenue or investment, there is an increase in owner's equity. An increase in owner's equity is credit. Now, if there is a decrease in the owner's equity, it is going to be credit. Now, here we can see that we have owner's drawing, and this is with a specific reference to sole proprietorship or partnership, where owners or the partners can withdraw money. So if they withdraw money, there will be a decrease in equity. But this is not going to be the case in the case of a corporation or a company, because there the owners cannot make any drawing. Now, owner's capital is obviously is for the equity, and increase will be debit, decrease increase will be credit, and decrease will be debit. For owner's drawings, increase will be debit and credit will be the decrease in drawings. Although I would like to emphasize that my videos will be based upon, are not going to cover these particular rules, as the focus will be on the company or the corporation and not on sole proprietorship or partnership. As far as the companies are concerned, we have the same rule, but what you can see is now there are no drawings, because the owners cannot withdraw money from from a company. They, if they want to sell off their shares, they have to sell it in the stock market. So if there is an increase in stockholders equity, increase in stockholder equity is going to be credit, and decrease in stockholder equity will be debit. Decrease in stockholder equity will be either because of dividends or because of expenses. So common stock will increase stockholder equity, and if there is an increase, it will be debit. Decrease is going to be credit. For retained earning, the same rule. Increase in the retained earning is going to be credit, and decrease is going to be debit. While for dividends, obviously increase is debit and decrease is credit. Regarding revenues and expenses, revenue will increase stockholder equity and it is going to be credit, and decrease will be debit. The rule for expenses are reversed. Increase will be debit and decrease will be credit. Now you can see that for the expenses, the normal balance is debit. For revenues, the normal balance is credit. For dividends, the normal balance is debit. For retained earning, the normal balance is credit. And for common stock, the normal balance is credit. This is the summary of what we have done so far. That if you can see, for assets and for expenses and even for the dividends, we will have the same rule. Then they will have assets, expenses and dividends will always have a debit balance, while the liabilities, owner's equity and the revenue will always have a credit balance. This has been explained more in another form. You can see the same rule. I mean, it has been expressed. Increase in asset is debit, decrease is credit, and the rule reverses for liabilities, owner's capital, and revenue. Now, this one is especially with reference to stockholder equity or partnership, and this is not what we are going to cover in this course, in these videos rather. But this is what we are going to focus on. I mean, we are going to follow these rules as far as the our videos are concerned. They are going to be that discussion is more oriented towards the towards the companies or the corporations, and not sole proprietorship or partnership. This is the standard form of an account, and you see, there may be transactions on different dates. If there is a debit, we put it on the debit side. If it is credit, we put it on the credit side. So you can see 25 is over here. Now here, the credit means there is a decrease in cash. Decrease in cash is going to be subtracted. That is 25 minus 8. We have a balance of 17. Now there may be some generation of cash again in the next transaction, and if it is in debit, it is debit. It is added. If, again you can see the amount has been added over here, 28, but then there is a decrease in cash, and every time the amounts has been subtracted respectively. At the end of the month of June, we have a total of 9,450 in cash in the business. Now this number is the number that the company may have given as a for reference. For any cash transaction, there is going to be a number. Say for cash, there will be one account, one number only, and that is 101. This helps to allocate all the cash and journal entries in the journal book. Now let me explain you about how we record from the journal into the ledger. You can see we have the date first of all. So depending upon whether it is a debit or a credit, so we have the date, that is 21st of September 2019, and we are having a cash account. Now for cash, you can see the number allocated, the code is 101, and that is going to be for journal number 1. You can see over here. Now cash is debit, so we put the amount in the debit column, and then we have the common stock. The common stock is 311, and we have a code as 311 for that. Same is the case, you can see 101 for cash. And then this is coming from journal number 1, so that's why we have J1. Now the date is the same, date do not change. Now common stock is credit, so we put the amount on the credit side, and you can see that as common stock has a credit balance of 15,000. Cash has a debit balance of 15,000. Now posting, as we have already talked about, that is the process of transferring the amount from the journal to the ledger. And you can see that when we have the journal in the journal, cash has a reference number as 101, and this is from the page number of the book of the journal is J1. So we have 101 over here, that is you can see J1, that is a reference, and the amount is in the debit column, so we have recorded on the debit side, and the balance is 10,000. uh, if a common stock, obviously it will be done in a different way, but this is you will understand better as we progress in this video. Now you can see that each chart of account has a unique number, a code 101. Now you can see you won't be finding 101 for the rest of the accounts, because this number has been allocated to cash. For accounts receivable, you can see it is 112 or 126 for supplies. So next, we again go with the same journal entries and the accounting transaction that we have used in video number 1 and 2 on accounting information system. These 4 components we have already discussed in the previous video, and now we are going to post this information. So we have cash for 10,000 and it is debit. We make a cash account, we have the date, and the amount is recorded on the debit side. The other account now is common stock. So we have a common stock, but this is credit, so we record the date on the credit side, and the amount is also on the credit side. Let us look into the next transaction. So again, you see all these 4 transactions we have already done, so I'm just jumping to the posting. Again, you can see we have cash, the cash account, because cash is there for 5,000, and cash is recorded over here. This 1,000 is from the first general entry. And then we have a new account, notes payable, and this is credit by 5,000, and that's how it is recorded. So debit will be recorded on the debit side of the account, and credit will be recorded on the right hand side of the account. Debit on the left hand side. Now again, here you see she has purchased equipment. So once again we have cash, and you can see this 10 and 5 are from the previous transaction. This is 5 and 10 was from here. So these amounts are already there as we are posting, and now you can see cash is credit, so that's why this is recorded on the credit side. For equipment, we have a new account, and for equipment it is debit, so this is recorded on the debit side. Then they have received 1,200 cash in advance, and we have a general entry, cash is debit and unearned revenue is credit. So cash is debit by 1,200. You can see the other transactions are from the previous Other recordings are from the previous transactions. And now we have unearned revenue, that is credit, and is recorded on the credit side. Next, we have again, you can see that cash is debit and service revenue is credit. I would repeat again that I have already explained 1, 2, 3, 4 in video number 1 and 2 respectively. So, still, if you have anything to refer, you can go back to the previous two videos. Now, here cash is debit by 10,000 and there is a revenue of 10,000 as well. Revenue is going to be credit because increase in revenue will increase stockholder equity, and increase in stockholder equity is credit. Then we have expense over here. So rent expense is debit and cash is credit. So we have rent expense as 900, and you can see that cash is credit, and that is how it has been recorded on the credit side. So just simple thing, look at the account and see whether it is debit or credit. If the account is debit, put it on the debit side. If the account is credit, then put it on the credit side. Then we have prepaid insurance. Remember, prepaid insurance is a asset. So we have it is debit over here, and cash is credit, and cash will be credited or put on the right hand side of the account, because credit is on the right hand side and debit is on the left hand side. Now supplies is debit, so supplies is debit and accounts payable is credit. Next, we go to transaction number 9, and if you can recall that because this is only a agreement, the transaction has not occurred yet, so that's why we are not going to record this transaction. And because there is no journal entry, there will be no ledger as well, because ledger is going to take all the information from the journal. Next is if dividend is debit, and if you can remember, expenses and dividends, when they increase, they are going to be debit. That's why you can see that if the dividends increase or the expenses increase, they are going to be debit. So dividend is debit by 500 and cash is credit by 500. Okay. Next we have salaries expense, and salaries expense is debit, so that's why this is put on the debit side, and cash is credit by 4,000, and that's why this is put on the credit side. I think I have copied this slide twice. I'm sorry for that. And then you can see that this is the summary of the cash account, where you can see here um, all the once we have recorded all the transactions, we are going to make the total. And remember that for the assets, the normal balance is debit. Why? Because the total of debit will either be equal to the credit or it will be more. It can never be less than the credit as far as assets are concerned. So that's why we have a debit balance. Unearned service revenue is a liability, and if you can recall, the normal balance for the liabilities are going to be credit. Okay. So once we have recorded posted all the transactions from the journal to the ledger, we are going to find the balances. And as you can see over here, the assets, I will put it here. You can see that assets, the balance is on the debit side, and that's why this is, you can see we have a balance on the debit side for 15,200. For liabilities, the balance is going to be on the credit side, because the credit will be more than the debit in the case of liabilities. So all the journal entries that were required have been posted, and they have, we have all these different accounts. We have taken the balances, and we just follow this simple rule. Assets, they will have a credit debit balance, and expenses will have a debit balance, while liabilities, owner's equity, and the revenue will have a credit balance. Okay. Then you can see that that is how we have the trial balance over here. And trial balance means we take the balances from the ledger. And what is interesting, we simply take the balances. So the for cash the balance, for cash, the balance is in the debit 15,200. For unearned revenue, it is credit by 1,200. So for supplies, it is a debit balance of 2,500. So debit balances are recorded on the debit side, and credit balances are recorded on the credit side, and these two totals must be equal. If the two totals are not equal, there is a mistake either in generalizing or in posting. So that is important, and that is very interesting, and this is going to be verified in a document what we call as trial balance. Now, but however, there are some limitations of trial balance. It may balance may be balanced even when a transaction is not generalized. A correct journal entry is not posted. That is, suppose the amount is 4,000, but we have debited by 400 and credited by 400 as well. So that still, the trial balance is going to be balanced. A journal entry is posted twice, or incorrect accounts are used in generalizing or posting, or offsetting errors are made in recording the amount of a transaction. So this completes the third video on accounting information system. I hope you have enjoyed this presentation, and if you found value in this video, then please like, subscribe and share my channel, and hit the notification bell button to alert you for the latest video. For webinar and guest speaker invites, please send me a message at accountingamir@gmail.com. Remember, effective questioning brings insight, which fuels curiosity, which cultivates wisdom. If you have any question or any suggestion regarding this session, then please put them in the comment box below or by email, and inshallah I will reply you back. Thank you so much and happy learning.